Hi there, welcome to Kneppy Invest and welcome to August 21st, 2024. On the rare occasion, and this happens very rarely, I do become a little bit overwhelmed with the amount of announcements that are released before trading begins on a day. And today, August 21st, was one of those days. I was a little bit overwhelmed. Yesterday, I did find the amount of announcements, financial results being released, was a little bit heavy in terms of volume. But today, I think it was about double the amount of companies who released their results today. I would surmise maybe 60 companies. And what I like to do before trading begins is I like to go through all these announcements, not with a fine tooth comb, but fairly quickly. But even though I do go through results fairly quickly, I can see things I like or dislike about the results. And then I wait for the market reaction just to see if I was right or wrong. And I was unable to do that because of the amount of announcements. But I did go through a few. Now, most of the companies I did go through are companies I either own or I do quite like for a potential buy in the future. But there's a lot of companies I have not gone through their results. So it's a little bit unfair for me to do a top 5 stocks of the day because I haven't gone through all the announcements. Now, I have come up with a list of 30 companies that I would like to maybe talk about later in the video. So instead of doing a top 5 stocks, I'll go through these 30 companies, maybe not all 30 companies. I might have to pick and choose. The other thing I should mention is yesterday, I came up with 4 companies that were looking like they were breaking out. And that's what I might do with these 30 companies. Look for companies that are breaking out. And yesterday, there were 4 companies: Ansell, Judo Capital, Ingenia Communities, and also McMahon Holdings. And just before closing yesterday, I decided that instead of waiting today to take a position in one or a few of these companies, I will take a position just before closing in one of these companies. Now, I already own and trading Ansell. And what I did with Ansell yesterday, instead of adding to my position or my trading position, I was going to go through that announcement or their results in a little bit more depth because I didn't quite understand why the market was really bullish on those results, because my glance look in the morning, I didn't quite like what I saw. And I can now understand, after looking at their results in a little bit more depth, particularly the second half results, I can understand why the market did have its reaction. Ingenia Communities and McMahon, yeah, but I decided to take a position in Judo Capital. So before we have a look at the ASX today, what I'm going to go is just have a look at how these companies have performed today. And I already know because I just want to highlight that I actually made the right decision here. Now, Ansell, I'm already trading this company, and share price is down. Last time I looked, yes, share price has pulled back 2.72%. I wouldn't say this does not confirm the breakout. Did I say that right? I wouldn't say the share price pulling back means the breakout is false. This could be just a little bit of a pullback. Sometimes you will see that when the share price breaks out, a little bit of profit taking, that sort of thing. Or maybe the market did overreact yesterday. Ingenia, this was barely a breakout, but it was a breakout. Share price did close at a long-term high for this company. There was pretty good volume as well, if I remember correctly. Well, you can't really see it here, but there it is. Some good volume did come in, and the share price has pulled back. Now, again, just like Ansell, even though share price has pulled back, that does not mean this is a false breakout. In fact, if you put a resistance line or price right there, share price is still above that point. So you could actually buy on the pullback for this company. And the other one was McMahon. Now, this is sort of a continuation of the uptrend. So this is less of a breakout than just confirmation of the uptrend. Share price did get to a long-term high. And again, just like those other 2 companies, a little bit of pullback. So this was definitely on my radar, but less powerful of a breakout than Judo Capital, even Ingenia. So I decided to take a position in Judo. And the whole reason I'm talking about this is because not only did the share price break out yesterday, the share price has rallied again today, up another 4.9%. And I really think this is a valid breakout. And in fact, I haven't even had a look at these results yet. So this is just me trading the chart, looking at the chart and trading it. So no look at the results. And the reason why I think this is more powerful than, say, McMahon is because the share price had been consolidating for about almost 6 months. Not a long, ultra long consolidation period, but it was long enough that when the share price did break out above that resistance level, that there was enough momentum and enough enthusiasm in the buyers that the share price can continue on its run at today. And yesterday there was really good volume, and that good volume has continued today. Not quite as high as yesterday, but it has continued. So that is what I'm going to do in today's video. I'm going to look out for some more breakouts, and maybe I can find more than 4. I would say probably definitely I'll find more than 4, and I might miss some because so many companies release their results. And what I'll do after I record this video and after the market has closed is I'll go through my screeners, and typically my screeners will find all the breakouts I have missed. Okay, so let's start with the ASX today. And generally, just by looking at this, it's been flat. I'm just going to update that. Flat. ASX 200 is actually down, but the All Ords is up. Small caps up a little bit. Tech up 1.83%. I have a feeling that's because of Wisetech, and resources have had a good day as well. So let's have a look at the indices and also the sectors. Yeah, Tech's had an absolutely brilliant day, and there's IT's up 4.77%. And the reason it's up 4.77%, I can almost guarantee you right now, it's because of Wisetech. If you haven't seen the Wisetech chart or the share price movement today upon the release of their results, this is the reason why. So let's have a look by market cap. And there it is, Wisetech up 16.7%. I'm pretty sure it was up almost 20% at one point. And that is the biggest IT company on the ASX. And even Xero and NextDC up a little bit. You can and Megaport up a fair bit today as well. Pretty sure they're releasing their results tomorrow. I could be mistaken. Yeah, so the whole reason why, and Data3's up. The whole reason why IT's had a good day is because of Wisetech. And that's a problem when you have a really big company within one of these sectors. How it performs really affects how the sector performs. We've seen that a few times now over the past few weeks. Otherwise, mining's had a good day, or materials up 1.4%, industrials up 1%, energy down at 2.6%. Is that because of oil or something like that? Let's have a look. What's had a bad day today? In fact, Santos and Yancoal both have had pretty bad days. In fact, a sea of red, a sea of blood on this particular energy company list. In fact, the best performing company here is Boss Energy, only down 0.7%. So, yeah, not a good day for energy. And I'm just going to have a look at industrials. I want to see why industrials is up. Again, this could be just because of one company. So let's have a look. Brambles. Well, yeah, Brambles. Because otherwise, it's some down, some up. Yeah, Brambles. I'm going to say Brambles. All right, let's have a look at the ASX 20. And ASX 20, where is it? It's actually down. Down at 0.45%. So some of the biggest companies on the ASX are down big. So we're talking about Santos, Woodside, just because they're energy. I wonder if financials are down. Financials sector is actually down 0.91%. So I would expect that a lot of the big banks are down as well. That's probably why the ASX 20 is down by a fair bit, is because the banks and also the energy companies. I'm also surmising that maybe iron ore's had a good day. So Wisetech, what's iron ore companies? BHP, Rio Tinto, Fortescue have all had good days. So let's have a look-see. And I would say maybe 13 companies down, 7 up. Oh, there we go. 9 up, 11 down. So again, probably the reason why it's almost balanced here in terms of falling and rising companies, the reason why the ASX 20 is down by a fair bit is because of the banks. The bigger companies in the ASX 20. And we do have confirmation ANZ is down. The best performing company by far is Wisetech. And there's Fortescue, Rio Tinto, and BHP, all up above 1%. In fact, Fortescue up 3.85%. So obviously, iron ore has had a pretty good day. And the worst performing companies, Santos, Goodman Group, which is real estate, CBA, possibly CBA went ex-dividend. Let me confirm that. So don't forget, companies are going ex-dividend. A lot of companies will go, yep. So CBA went ex-dividend today. That's the reason why the share price is down 339. You notice the dividend price was, what was it, 250, and the share price is down by more than that. So pretty sure that's probably because of franking. You do have to understand that as well, because I saw one of my companies down 5% the other day, and I was like, oh, why is it down 5%? And then I went ex-dividend, yeah. So that's why maybe some of these companies are not performing, because they're going ex-dividend. Possibly, some, possibly. Okay, so let's have a look at the worst and best performing companies on the ASX today. We'll start with the top gainers, and I'm going to point out all the companies that did release their results. A company called Dundas Minerals, up 167%. Obviously, this company did release something today that I completely missed because it was released among all the results, and I'm going to miss some announcements. But the whole reason I go through this process is to find announcements like this. I'm assuming they released an announcement. I'm assuming it's a mining exploring company. Here we go. High grade gold intercept confirmed at Windania. So Dundas. Let's have a look at the chart. Is this a breakout? Would I get excited about this? Possibly. Share price in long-term downtrend. Massive volume coming through. This could be the end of the downtrend for Dundas Minerals. This could be a market cap says 2.5 million. So this is a small company. With the share price rising 167%, the market cap is now about 6 or 7 million, 5.42 million. I can't do mathematics. But anyway, a small company, suppose interesting announcement. I'm not going to have a look at it because it's an exploring or mining exploring company. Otherwise, we've also got companies rising on fairly slow turnover. Here we go. Humm Group, up 31.73%. They released their results. If I actually was doing a top 5 stocks of the day, Humm Group would have been up there, but it's Humm Group. It's Humm Group. So I will talk about Humm Group a little bit more later in the video. Did I write it down? I didn't even write Humm down. I'm on my list of. Oh no, I did. Right at the end. Yeah, there we go. Lavoto, another good day. What's happening with Lavoto? They had a really good day. Few good days. Was it last week? Oh, what am I? Oh, geez, that's like 4 really good days in a row. Share price has gone from about 13 cents up to 34.5 cents. I would not be trading this right now. I'd be nervous. You're going to see the share price dive. You always, when you see the chart look like this, share price just goes on a massive run over a very short period of time. You will eventually see profit taking, and the enthusiasm of the buyers will not fade away, but they'll become much less than the enthusiasm of the sellers. And not only that, as soon as you start to see the share price fall back, you'll see the enthusiasm of the sellers increase. And it could increase significantly with that sort of share price rise. Elsewhere here, Kip McGrath Education Centres up 20.9%. They released their results yesterday afternoon, evening. I did not have a look at those results, but I have a feeling that could be a breakout. So we'll have a look at the chart for that company. There's Wisetech, up 16.7%. So let's have a look by market cap. And now we're going to see a lot of companies to release their results today. Wisetech, yes. Brambles, yes. Charter Hall Group, up 15%. That's interesting. Lynas Rare Earths, no. I don't remember this company releasing results. This could be just the price of rare earths, maybe going up. 16th, no. So it's probably just the price of rare earths. Liontown, maybe the price of lithium. Maas Group, yes, they did release the results. Data3, Healius, Superloop, SRG Global released their results yesterday. I did talk about that company. Really good results. They also announced an acquisition and a capital raising. The capital raising was done at a 1% discount to the share price, if I remember correctly, and the share price is up 7%. And I have heard news that the company they are acquiring is a really good company. So there is a lot of hope out there. And you can just see by the share price rise after a capital raising that there is a promising acquisition. Cedar Woods Properties up 7.3%. Yes. BrainChip, no. Humm Group, there's Humm Group. Schaefer Corporation, I believe, did. Solvar released the results yesterday, fell a fair bit, so this is a bit of a rebound. Okay, and if I show all companies, we can go down further. SKS Technologies, bouncing hard. I'm glad I added to my position in that company based off a bit of fear selling. Share price, yep, 5.6%. So don't forget, market index is 20 minutes delayed. And that's it. Going down the list. I thought there might be some more here, but no. Oh, we're getting to market caps of like 40 million. That's why. Okay, so let's have a look at the worst performing companies on the ASX today. I'm pretty sure there will be some companies who did release their results today. Andromeda Metals did not. Andromeda Metals. High turnover. So share price is down 25% on pretty good turnover. $400,000 worth of shares is pretty high. Did they release anything today? Yes. Capital raising. Okay, we can move on. I will always move past capital raisings when share prices are down, because usually done at significant discount. But unless the capital raising is perceived like a good thing, like SRG, more than likely this is they need money to mine, to drill, that sort of thing. And as I go down, there is one company that did release results today, Lycopodium, down 12.63%. Did I put that on my list? I did. And then that's it by percentage change. So not a lot of negative reactions from the market today. Now let's have a look by market cap. Santos did. Well, Yancoal released their results, results yesterday, or was it the day before? And they've stopped the dividend, so they're down again. AUB Group did release their results. Ventia released. Healius, I think Healius did release their results yesterday, yep. Maas Group released their results yesterday, so some continued negative momentum in some of these companies. Lycopodium, Media released their results. Was it yesterday or the day before? So, and Baby Bunting released their results yesterday, but the share price was up. Cosol, yes. Retail Food Group yesterday. Bizloy still down again. Integrated Research yesterday. So a lot of these companies who are down big released their results yesterday, not today. Maybe there's a delayed reaction. I don't know. Tamil did. And that's it. Now again to markups of 50 million. All right, so let's go through some of these companies that did release results today. And what I'm not going to go through the results. What I'm going to do is I'm going to be looking for some breakouts. And I do have 30 companies on my list. Hopefully that should be enough. We'll start off with KME. And this was an announcement or results that were released last night. And straight away, this is a potential breakout. Now, they did release negative, I'm assuming this is negative results back in February, because the share price fell significantly during February, and this could be a fairly quick turnaround. I probably would prefer a little bit higher volume. I'd like to have a quick look at the results. And the current market cap of this company is fairly small. And if you look at the weekly chart, I'm pretty sure the company's share price has dropped a fair bit over the past few years. Yes. And this was talk of the town back between 2018 and 20. Share price went on a significant run from about 30 cents all the way up to about $1.60. And it's fallen all the way back down to 30 cents. But yeah, an interesting reaction from the market. I wouldn't necessarily say this is didn't bring any water. Wouldn't necessarily say this is a breakout. We have seen a little bit of selling today, but this is getting very close to breakout because the share price is at a 6-month high. Yeah, exactly 6-month high almost. So that big down day in February was the 21st of February. So exactly a 6-month high with Kip McGrath. Other companies, I'm going to go through the list fairly quickly. Zimplats also released results yesterday. This was not on my 30 companies, by the way. And this chart is just, why did I include Zimplats? Share price down a little bit. Chart is horrendous. Okay, so let's go to my list. I was just going to go through all the companies that released results, but I'll stick to my list. Step 1. This is one of the results I did have a look at, and I thought they were okay. In fact, I thought, pretty good. The share price actually went, I'm pretty sure the share price did open higher, and we can confirm that by looking at the 1-minute chart. Yeah, the share price did open higher. In fact, the share price went to $1.91. Little bit of selling at about 11:30. I wonder if that has to do with the conference call. In fact, we can confirm that. Step 1, what time, in fact, let's see if they did have a conference call. I'm assuming they did. There it goes. Conference call. Did it start 11:30? And the conference call started 9:30. No. So I don't know why the share price took a bit of a dive at about 11:30. It was 11:26. It could have been just a fund manager getting out. I don't know. And the share price has leveled off since then. And to be honest with you, the volume wasn't big during that, like a 5-minute period. In fact, if you look at the 5-minute chart, you're going to see the share price take a dive in that 5-minute period. Yeah, there it is. Share price fell. Well, it's only 3%, but it's still a fair bit. And the volume was weak. So there's not a lot of strength in that pullback. That's the key. If you saw a lot of selling, a lot of high volume, that would be concerning, but no volume. And the reason it would be concerning is people see the share price drop and go, oh my God, share price is dropping, I got to sell out. So they increase the volume. But when the share price fell, there was no reaction just after that. No volume. In fact, very weak volume, like a couple of hours after that. And we did see some volume coming in at 2:15 p.m. Didn't really drive the share price up higher, but I don't know what happened with step one. I think the results were pretty good. In fact, the share price is now flat. It's up to $1.80. So I would say that was just someone just selling on market, something like that. So if you go back to the daily chart, nothing to be concerned about with step one. There's me buying at 53 cents. Did take profits up here. Now the share price is higher from when I took profits, but I'm okay with that because the money I received from selling step one has been put to good use. That's the other thing you have to take into account. Just don't get peed off that you sold shares in a company, the share price has gone higher, because you have to understand what you did with that money. If you effectively utilize that money effectively, and maybe you got a 25% return from the profits of, maybe I got a 25% profit from step one, and even though share price is a little bit higher, maybe I was better off taking profits with step one. Hopefully that makes sense. Okay, so corporate travel management. Actually, in fact, I missed this one because when I opened up the CommSec announcement page, it started at about 7:50, and corporate travel management released their announcement just before that, I believe. Yeah, 7:30. So in fact, I missed this. I actually went back because I did see a tweet about corporate travel management's results, and I went, they didn't release results. And then I went back to CommSec page and I updated the page, and then went back a little bit further. That is the problem with CommSec sometimes. It is not the perfect platform, but it's one of the best we have. Anyway, corporate travel management down 4.4%. Share price has rallied. So share price was down as much or as low as below $11. So that's a good thing. The share price has rebounded pretty nicely today. If you look at the 5-minute chart for corporate travel management, the low in the share price was in that first 5 minutes. So that's a good sign, possibly. But when you do look at the daily chart for corporate travel management, this is an ugly chart. Now, this is a potentially, I might even say, quasi-high quality company. So is there value in corporate travel management? Now, there could be a bit of a pushback saying this is quasi-high quality. And I probably would, maybe this is not high quality anymore. And the chart might attest to that. So that's corporate travel management. Ebos. This is starting to look a little bit more interesting. Share price down a little bit today. Now, even though the share price is not breaking out today, the chart is starting to look a little bit more interesting. However, the share price is at about, it's almost at a 6-month high. So not technically the sort of breakout I am looking for, but it's getting close for Ebos Group. Moving on to Superloop, a company I am trading. Another one of the announcements that I did not have a look at, even though I'm trading it. I just want to see how the market reacted, and nothing to complain about here. This is just continuation of the uptrend. You could even say this is a breakout, not the ideal breakout because we haven't seen a consolidation period. Share price is in an uptrend. I'll just say this is confirmation of the uptrend. Now, the only negative thing, being a little bit nitpicking here, is we have seen a little bit of selling during the day. Share price did get as high as $1.75. Now the share price is $1.70. So that's a little bit of nitpicking, but Share price is still up 6% for the day. You're not going to complain about that. And I'd just say maybe there's a little bit of profit taking happening with Superloop. Let's move on to the next one. We have IAG, and share price down 3%. Now, this is a nice looking chart. I do not or am not trading any insurance companies right now. I think it's maybe too late for the insurance companies, particularly if we start to see interest rates drop. And I think if we do see that, not even just Australia, but I'm talking about overseas, I would assume, and this could be incorrectly, that you will see a little bit of weakness in many of the insurance companies. Maybe not the insurance brokers, but definitely insurance companies. And the chart does look good now, but how long will the good-looking chart last for IAG? Talking about insurance broking, this was just by happenstance, or coincidence or chance, and not planned. AUB Group. This one is interesting. I do own shares in AUB Group. So I'm going to get rid of this purple box. Share price in an uptrend. Nice rally in the share price over the past month, just after the bad day on August the 5th. Share price down 5.4%, but there has been a bit of a rally today. And let's have a look at the 5-minute chart for AUB Group. Oh, it's been all over the place. So share price did drop on open. I had a look at these results, and I thought they were pretty good. No complaints. I can't remember exactly why I thought they were good, but my impression about these results, I liked it. But the markets thought differently, and that's why I like to have a look at how the market does react, because I could be wrong. And in my opinion, collectively, the market is smarter than me. Collectively. So AUB Group, down a little bit, but nice little rally in the share price. The other thing to note is sometimes you do see an overreaction from the market, and opportunistic is my favorite word in the English dictionary when it comes to investing. It's sometimes good to be opportunistic when the market does overreact, sort of like with SKS Technologies. Pexa released the results and also announced that the CEO, I think, is resigning, but not straight away. I think he's just saying, well, the company's doing well. It's time for me to move on and enjoy the rest of my life and not work 26 hours a day. I would assume most CEOs do that sort of thing. That's a 5-minute chart. Ooh. So this is complete opposite to some of these other companies where there was a lot of excitement when this company released their results. Share price went all the way up to $14.30 and it has pulled back to $13.71. So again, sometimes you see a reaction from the market and then the professionals come in and go, oh, you have set the share price higher. I'm going to sell. Let's have a look at the daily chart. If I remember correctly, the company was not profitable, but I think this company will be profitable fairly soon. I don't know. I'm trying to remember, but I remember thinking not quite profitable, but maybe soon. And by the way, the chart, not a breakout. So again, I'm looking for breakouts here, and this is not a breakout. And we probably knew that. Anyway. Ventia, this was an interesting one. So I'm also a shareholder of this company. I thought the results were pretty good. Maybe just the valuation. When I first bought shares in this company, the PE ratio was like 12. Now the PE ratio is 20. Now it's probably lower than 20 now because the results have come in. And nice growth. I think, if I remember correctly, 10 to 15% growth in revenue and profit. And this is another case of the market maybe overreacting on open. Share price down 5% right now. In fact, 423, and the share price just keeps on dropping. But when the share price when the market opened, the share price was higher. In fact, the selling started off right away in the first 5 minutes and continuous selling during the day. So this is another case where I don't want to say amateurs, but the retail investors who tend to open the market got a little bit excited. They saw the numbers and went, oh, this is pretty good. But the share price has gone the complete opposite direction. So Ventia, and again, the chart before today looked pretty good. This is not the end of the downtrend, though. Who knows? Tomorrow the share price could be up 5%. I'm just thinking of Iris. Iris had a really down day yesterday after a fairly similar looking candlestick on when they released their results on Monday. The share price opened up higher and then they were selling during the day, just like Ventia. And then the next day, share price actually dropped 7.8%. I went back, had a look at the results, and I was like, they actually did an upgrade. They did an upgrade. I'm not sure what caused the sell again. Now the share price is up 2%. So I'm trading this, by the way. I'm not sure what caused that selling yesterday. It's a really weird one because I did see an upgrade in their results. Okay, so that's an extra one for you. Charter Hall. This is interesting. Not the sort of company I would ever have a look at. But when the share price of a company is up 15%, even though it's sort of one of these companies that you're not going to see much capital growth, and the share price, look at where the share price is right now. Draw a line at these old highs. So these old highs back in March, share price was around about $13.80. Share price now is at $13.80. So that's at a resistance level. And the share price is just hovering on that resistance level. Bit of volatility during today. Share price has ranged between $13.20 and $14.20. Let's have a look at the 5-minute chart. So yeah, the share price opened right on that resistance level. Share price dove in the first 15 minutes, recovered, hit that resistance level again, dove back. And in fact, the share price has pulled through that resistance level at 12:45 p.m. and has remained above it. So even in the short term, you can see how the share price reacts on that resistance level perfectly today. You can see it acted as resistance. Now it's acting as support. So that resistance level maybe has turned to support just today, just by looking at the 5-minute time intervals. But again, Charter Hall, if you look at the weekly chart, I'd say there's not much movement. Yeah, share price has gone sideways for the last 5 years. Charter Hall, Cleanaway. Haven't really found a breakout I like, apart from maybe Kip McGrath. A continuation of breakout for, or not breakout, continuation of the uptrend for Superloop, IAG, that sort of thing. Let's have a look at Cleanaway. Still on my search for a breakout. And no. Chart is looking interesting. Share price in a short term, well, not short term, a very gradual uptrend. What the hell happened on this day here? 23rd of April, share price up 15%, and then the next day pulled straight back. Not sure. I don't really follow this company all too closely, but the chart is looking a little bit more interesting than it has for a while. And when I say that, if you look at the weekly chart, share price has done nothing for the last 3 years. So it's Cleanaway. Cedar Woods Property, another company I wouldn't follow that closely, but this is a potential breakout. This is probably the first potential breakout that looks interesting. The company itself, maybe not. So this is I think pretty sure it's a property developer, and I'm pretty sure their property is residential. I'm pretty sure because they're developing land near me. And I'm pretty sure most of that, if not all of that, is residential. This chart actually does look interesting. I like it. I have no complaints. The share price is almost at a 1-year high. Yeah. I do like this chart. So potential breakout for Cedar Woods. Again, I have not looked at the results. The results could be terrible. Well, that's probably the wrong way to say it. The results on the surface might look terrible, but the market likes it for some reason. Share price up 7.5%. Let's have a look at DTL. I did notice the share price of this company was up, and this was on my radar the other day for a potential breakout. And I would probably say right now, this is a breakout. In fact, I'm so confident it's a breakout, I'm going to put it down on my list of breakouts for today. So this is data 3. Yes, I'm calling this a breakout. Another interesting reaction from the market because the share price was down as much. It was down as low as $8.20 during today. Share price now at $9.28. So this is an instance of the market maybe initially reacting badly, and then the professionals coming in going, ooh, there might be some value of data 3 at these levels. Look at the 5-minute chart. Yeah, it was in that first 20 minutes, a fair bit of volatility, and you could have bought shares in this company at $8.15 at 10:05 a.m. And then boom, look at the share price just go bonkers. Someone liked it. They maybe had a closer look at the results at about 10:20 a.m. and went, ooh, there's some goodness in these particular results. And I'm going to call it, yeah, this is a breakout for data 3. The last time the share price was this high was in February. So we have my 6-month high. I'm also looking at 3 months high, but I prefer 6 months high. Okay. Healius, this could be another breakout because I also remember seeing this company in the top gainers of the day, And this company also popped on my radar for a potential breakout. Let's have a look at Healius. Yes, I'm saying this is a potential breakout, and we're also looking at about an 8-9 month high in the share price. In fact, the share price is up 12.6%. So we have 3 companies on my breakout. I'm not including Kip McGrath just because, anyway. So Healius, again, another company. I have not had a look at the results. On paper, their results might look terrible. Market says differently. Maybe it's the outlook. Could be as simple as that. Maybe they're fairly I was going to say buoyant about the outlook. And maybe they're going to be wrong, but SXE, this is one of the companies I did have a close look because I am trading Southern Cross Electrical Engineering, or SCEE, and this was one of the companies where I was a little bit uncertain how the market was going to react. So the share price is up 3%. The reason I was a little bit uncertain how the market was going to react because on the surface, the numbers looked pretty weak. They did grow, but with the share price rising like this over the past year, share price has gone from 65 cents to $1.89. So the share price has tripled in the past year. I thought maybe the market was expecting better numbers in financial year 25, but it was their outlook. And they spelled it out really good in the highlights section. Really, really good. So this is one instance where I'm going to show you what they spelled out in the announcement, because I did actually have a look at this one. And if I was being biased, I would have included this company in the top 5 stocks of the day, by the way. So EBITDA up 5%, EBIT up 10.4%, profit up 9.1%. I thought, how is the market going to react to that? Of course, it's also compared to consensus forecast or guidance, but it's these last 2 bullet points talking about structural tailwinds behind the company. Yes, absolutely. That's why I am trading this company right now. But also the anticipating financial year 25 EBITDA of at least 53 million with growth in financial year 26 and beyond. And I think that the investment community is just bypassing the results and just looking at that statement or these final 2 statements and going, yes, there could be significant growth in this company over the next 5 years. So in a way, even though I am trading this, I think this could be a longer term trade for me. When I say longer term, I would not be surprised if I have a trading position in this company for the next 5 years. And the share price could be significantly higher in 5 years' time. I'm just saying could be, possibly, not will be. So that's Southern Cross Electrical Engineering. Comms Group. Okay. I saw the share price up a fair bit, 15%. So I thought I'd talk about this. And I was thinking, this could be a breakout. No, not quite. Not quite there yet with Comms Group. Really good volume coming in. You can see a really good increase in volume in 2024, particularly over the last 2 months. But the downtrend is still in play. This has not changed, or it has not changed for this company today. Comms Group, mark up $20 million. I did have a quick look at the results, and I thought I can't remember. I thought they were interesting enough that I should have a closer look. Lycopodium down 11%. Okay, so a bad performer. In fact, was it the worst performer today in terms of companies releasing their results? Really big volume coming through. Share price has, in fact, opened higher and has fallen during the day. That's not a good sign. Has been a little bit of bounce off $12. Share price still in an uptrend, but there is potential that this down day could possibly put an end to the longer-term uptrend for Lycopodium. So obviously, the market does not like the results, or maybe the results and or the outlook for Lycopodium. Just going to have a look at the 5-minute chart. Yeah, a lot of selling, and that selling continued all the way through to about, just after midday, 12:45, and we have seen a little bit of buying coming in the last 2 hours. So Lycopodium, not a breakout. Bapcor, not a breakout. Up 3.45%. Nothing much to talk about when it comes to Bapcor. Maybe here for Maas Group, maybe there is a breakout here. I actually had a look at these results and I was like, ooh, interesting, could be good. But I thought the same thing when it came to Maas Group, and Maas Group share price tanked. In fact, even today, it's tanking even further. So I thought, just because on the surface results look good, I don't know the company well enough. Maybe the results disappoint the market. And in a way, if you have a look at the one-day candlestick, share price actually opened lower. So initially there was a bad reaction, and just like some other companies here, that reaction or that sentiment shifted fairly violently within the first 10 to 15 minutes of trading. Share price is higher, but not a breakout. Not a breakout. Yeah, you can see the share price just rallying really violently starting at about 10:15 a.m. You might be asking, well, how do I define a breakout? So what I'm looking for here, and I make sure I should timestamp this. So what I'm looking for when it comes to breakouts, a few things. So these breakouts are on positive financial news, and financial news, what best than financial results? Not only financial results, but also outlooks. So it's the market isn't reacting to the results. They're reacting to how the results differ from expectations and guidance. The market is also reacting to any sort of outlook the company gives. That's very important. Some companies give it, some companies don't. Step one did not give any guidance for financial year 25, and that's their prerogative. And in a way, sometimes it's better companies don't give guidance, because it is hard to know how you're going to perform in a year's time or the next year, particularly if you're in retail, I would assume. Anyway, so Maas Group, market initially didn't like it, and more than likely that part of the market is the retail investors, and now the market does like it. But what I'm looking for is positive financial news. I completely forgot I was talking about this. I'm looking for positive financial news. Another thing I'm looking for is share price hitting at least. Now, it used to be a 6-month high. I will give a bit of leeway for a 3-month high. So I want at least a 6-month high. The reason I'm looking for that high is because I don't want resistance. So here, share price of Maas Group was higher not that long ago, in the start of August. It was also higher between February and April. Those shareholders who bought at those high prices are resistance. They want to get out of Maas Group. They think this company is a dog stock because the share price fell after they bought. And you have to understand the mentality of investors. The majority of investors think the share price should go up as soon as they buy into a company. And if it doesn't, it's a dog stock. I've got to get out. And I've heard investors say this. Typically, it's the less experienced investors who say that or think that, which is understandable, because when you see share price go down, you go, "Oh, I'm at a loss here. I don't want to have a loss. Oh, that's icky. Oh, I've got to get out. Oh, I've got to preserve my capital. Get out." Which is not a bad mentality if you are trading. And the whole point is to ride your winners, sell out of your losers. But that is the mentality. A lot of mentality out there is, if the share price falls, I have to sell out. Doesn't matter if the share price moves back into an uptrend, they still sell out. So there is a bit of resistance for Maas Group. So hence, I want at least a 6-month high. Perfect example is Judo Capital. Let's have a look at that company again. Judo Capital. Beautiful, 6-month high on the breakout yesterday. Let's go back to Maas Group though. So I'm looking for that at least a 6-month high, leeway with a 3-month high. Sometimes, doesn't always work. The other thing I'm looking for is volume. But typically, if a company has released a positive financial announcement, profit upgrade, that sort of thing, you will see pretty good. What's happened there? You will see pretty good volume. Today has been okay volume. Yeah, I'm looking for above average volume, sometimes significantly above average volume. So we do have that with Maas Group. We have a positive financial announcement, but we don't have a 6-month high. Let's move on to the next company, Breville. Okay, now I did have a look at Breville because I am a long-term shareholder of this company, and you'll notice the share price has maintained its uptrend. So again, this is sort of like a quasi-breakout. Share price is at a long-term high. So we got a 6-month high, higher volume, positive financial announcement. On the surface, again, the numbers looked weak, but if I remember correctly, the numbers beat expectations. No, the numbers were were towards the upper end of the guidance, or did they beat guidance? And they also mentioned, if I remember correctly, the second half, they saw really good growth. So the first half was fairly weak, second half, really good growth. So better than expected numbers and pretty good growth in the second half. And I can't remember if they did any outlook, but That's the reason why the share price of Breville is up 5.5%. We have seen a little bit of selling, but that's okay. That's okay. Share price is at an all-time high. No, we saw the share price get a little bit higher back in 2021. This could be, even this could be resistance. There could have been shareholders who bought in Breville back in 2021 at higher prices than right now and have waited 3 years to get out. Oh man, I've got to get out of this Breville. This Breville is a stock. It's an awful company. If I had to wait 3 years to get out, I'm going to sell out as soon as the share price gets back up to where I bought. So even though the share price is in a beautiful uptrend right now, and the smart thing to do would be to maintain your holding, no, I've got to get out. Share price is back up to the levels. The reason they do that, another reason they do that is if the share price slips back or falls back, they go, oh, I've just ruined my chance to get out. Oh. So the next time the share price rallies, what do you think is going to happen? They're not going to wait. They're not going to think about it. They're just going to set out. So that is the mentality of a lot of investors. Okay, Domino's Pizza. This could go either way. Ooh, this is going to be interesting. I did not see it in the best or the worst, so it's not going to be bad. So Domino's Pizza is down a little bit. Okay, so nothing much happening here. And yeah, so at this point in time, I think Domino's Pizza, it all depends on what you think about this company. Yeah, I think because you would not buy any shares in this company based off the chart. So is there any value in Domino's Pizzas at these prices? That's the main question you have to ask yourself. And that's a question you have to ask yourself. I can't tell you. A question for yourself. Wisetech. Now let's leave Wisetech to the end, if I remember. Wisetech. Hansen Technologies. And there's a reason why I want to look at Wisetech last is because it's done really well. Hansen Technologies. And this is another one where the share price has just been violent today. All over the place, not really a breakout. Share price has been in a downtrend. So let's have a look at the 5-minute chart for Hansen. Well, on open, the share price fell to $4. You could have bought on open and you're already up 10%, or in fact, up over 10%. So you could have bought at $4 and the share price now is $4.58. So almost 15%. So this is another case where there was a little bit of no reaction from the market. The market got it wrong on open. So even though I've been saying that the market is smarter than me collectively, you could actually argue maybe it's not, because there is an overreaction from the market here. There has to be, because the share price now is up compared to yesterday. In fact, what's the share price up? 5%. Share price is up 5%. On open, the share price was down almost 10%. Now it's up 5%. That's insanity. Another reason why I do like to wait. SSM, which is Service Stream. Did I see this company on the list? I can't remember. And this, up 5%. It's not, I'm picking hairs here. I do like this chart. Unfortunately, I did take my profits. I did trade, buy some shares in Service Stream way back here somewhere. I think it was on this breakout here. And then I sold somewhere in here. Should I have sold? Probably not, based off the chart. Chart looks pretty good. And this is definitely a potential breakout and a potential buy. Chart looks pretty good. The market like results. Okay, Service Stream. What else do we have here? Santos. Share price down 5%, wasn't it? Ooh, yucky. But when you have a look at the chart, why would you be owning Santos? It is a question I would ask. Why? Look at it. Share price doing nothing, going up and down, up and down. I could imagine trading this, but if you were trading this, you'd buy towards the bottom of the range and then sell towards the top. And the share price right now is in the middle of the trading range. I would only buy this if I saw a breakout above $8.10. You might say, well, if I think there's value in this company, well, yeah. If you do think there's value in this company right now, I would just wish you luck. I'm not gonna fight, push back. I just wish you luck. Cosol, this is a company I do own. Share price down a little bit, or 6%. It's all over the place. It's illiquidly traded. This is a small cap that I'm just going to own or hold. Who knows for how long? I was saying, or probably saying or thinking, mentioning, I am trading this, but I've come to realization it's a small cap. I don't want to trade small caps I do like. And this is one of those companies I do like. I think it's probably fair value. So why trade a company, a profitable small cap company that is growing at fair value? There's just no reason to sell it because it could grow significantly in the next few years. And $1.07 could seem like a bargain. So again, not selling. Imdex, nothing. I'm going to say this is a boring chart. Nothing much happening with this company. Share price down a little bit today, but yeah, there's not much a reaction, just a slightly negative reaction for Imdex. However, Shape Australia, this chart looks brilliant, and share price up another 2% today. Doesn't look like it, but a beautiful looking chart. And no reason to sell this. 4 big up days in a row, but can't complain. This is one of the announcements that I will have a closer look at. I did have a glancing look. Revenue was down, but profit was up 50%. So if revenue was up 20%, profit up 50%, I wouldn't say going all in, but I would love that announcement. But revenue was down. So that is a slight red flag. They have improved their efficiencies, their margins. That's why like EBITDA's up, profits up, but that's not a sustainable model over the long term. You need to see revenue growth. Now, maybe this is just a little bit of a dip. And next year, maybe they gave some guidance. So I haven't gone that in depth. So chart looks pretty good. So no reason to sell Shape Australia just yet. Humm, I'm going to go SRG first. Now, I did look at this chart yesterday. And now, again, this is just a case. You can just see a bit of selling today because not that long ago, the share price was at these levels. So all these investors who bought like 2 or 3 weeks ago at higher levels than what it was yesterday have said to themselves, oh, I can sell now out of this dog stock. SRG Global, share price went down just after I bought. I now can sell out. And that has been a little bit of resistance today. But I would say there's a good chance the share price of this company is going to be significantly higher in a year's time based off their results, based off the growth, and based off the expectations, and based off the facts. No, it's not a fact. Based off the hypothesis that this acquisition they have made is going to be successful. And it may not. It may not. Okay, 2 more companies to go. And I have missed quite a few. Who have I missed? Yeah, quite a few companies I have not talked about. 2 companies to go. Humm and Wisetech. Don't forget Wisetech. And the reason I've left these two to last is these 2 companies probably would have been the top 5, towards the top of the top 5 stocks today. Humm Group, because the share price has just gone bonkers today, up 30%. Now, this actually did come onto my radar the other day. It broke through this resistance level. Share price moved, went to at least a 3-month high, almost towards a 6-month high. And I was like, oh, this is interesting, but it's Humm Group. And I always think when I think about this company. It used to be called Flexi Group. They changed the name to Humm Group, got into the buy now, pay later. And for some reason, the market has loved their results. Share price up 30%. And again, you can see the share price was up at these levels back in February of last year. Then they released their results on the 20th of February. Share price dropped 19%. So what happened? What's the difference between February and right now? It could be the outlook. Possibly the second half was better than expected. So even though the on the surface the numbers look weak, second half could be better than expected, and maybe the outlook is pretty good as well. There is something has caused a bit of excitement in the market. The other thing is the volume, really high volume. So this has caused a lot of enthusiasm in the market. This is one of the announcements I'm going to have a closer look at tonight, trying to understand why the market loves these results. Not my favorite type of company, but the market sees something. So I want to see what the market sees. I'm just curious. But even though Humm Group share price is up 30%, Wisetech would have been top stock of the day, I think, because this company is huge. Mark up, was it? That's an ASX 20 company. Whenever you see share price of an ASX 20 company rise 16%, it's good in one day. So this company has a market cap of 30.6 billion, P/E ratio of 141. So it has to hit the results out of the park. I actually have not had a look at these results yet, even though I am a long-term shareholder of this company. I did see a tweet. In fact, I have a little bit of time, and this will be my final company. Where's Twitter here? I saw one tweet, and that was enough for me to not really delve any deeper. Wisetech. It was from a Rudy. Yeah, here it is. Yeah, this one. He has two here. I think I read this one, or maybe it was this one. I forget which one. And it was just enough for me. Very strong free cash flow delivered with large beat to market. So again, beating market consensus or expectations. Revenue and cargo-wise revenue brought in line with consensus, and EBITDA was a 3+ beat to consensus, and 3% beat to RBCE and 1% beat to consensus. Free cash flow was a standout with substantial 108% beat to RBCE and 87% beat to market. Appears to have been driven by strong cash cost control and lower R&D capex relative to expectations. And goes on a little bit more. So there was a bit of a beat to expectations. This other one says, Wisetech has reported its financial year 24 results, which are below expectations. So that would have caused me a little bit of concern if I read that first at the revenue line, but marginally ahead at the EBITDA line. So I've actually read that bit instead of this one first. So this was released at 10:04 a.m. No, I actually did release this. I did read this one first, I think. I can't remember now. It's too far back. Anyway, so I read one of these first and I went, oh, okay, it should be pretty good. And then I saw the share price open up pretty high and I was like, oh, that's probably a little bit better than I would have expected because the valuation of this company is so high. But anyway, I can't complain about the reaction from the market when it comes to Wisetech. It beat expectations. Well, some of the metrics beat expectations, particularly that free cash flow. And as I say, cash is king. And typically, I prefer to look at cash flow in a company than profits. But there's always a but. Don't solely rely on free cash flow because even free cash flow can be manipulated. Profits can definitely be manipulated. When I say manipulated, I mean legally manipulated. But when you look at any sort of financial statement, any numbers at the top of the financial statement are less manipulated. And as you go down, there's more and more manipulation. So if you look at the cash flow statement, the Australian version of the cash flow statement, they start at the cash receipts. Well, cash receipts can be manipulated, but they're less likely to be. And then you go to operating cash flow, and you have financing activities. What's the other one? Investing activities. And so you might see manipulation in there. And then, so you start off with cash receipts, you see operating cash flow. So I do prefer operating cash flow over free cash flow because there's less manipulation. But then you go to free cash flow after you take out capital expenditure. And then you get cash on hand at the bottom. So anyway, that's all the wisdom I have for you. Not sure if it's that wise, but I did like the very fact that there was a beat in free cash flow. But it's not the end of the story. You do have to look at many different aspects of the business. Anyway, so that's all I have for today's video. Sorry, no top 5 stocks today. If you have any questions, any thoughts, leave those in the comment section of the video. And I have come up with 4 breakouts, although you could probably put Wisetech there as well. So we have Cedar Woods, Data Free, Healius, and Service Stream. I might have include some other companies in there as well, but that's a nice group of potential breakouts to follow over the next few days. Anyway, if you have any questions, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day.